Inside financial markets, the retail mindset can cost you everything you have. It's not an optional thing to want to become a professional inside financial markets. It's absolutely mandatory. In this video, I'm going to outline what the differences are from the retail thinking to the professional thinking, how professionals look at the market, and steps that you can take to make the progression between retail and professional, or if you're already a professional, tips to enhance your professionalism as well. Stay tuned, it's going to be a great video. One of the major problems with retail investing and trading is the focus of retail. They only look at a few charts, they don't gain the market pulse, and they don't have the knowledge of how financial systems work. Financial markets are incredibly complex, so when we say that retail has low knowledge, it's not surprising. The markets are very, very complex. And people, when they're in the retail mindset, they're looking for very simplistic answers, rules that always hold. Unfortunately, I hate to disappoint you, that's not what happens inside financial markets. If it was, everybody would be a trillionaire. Retail typically has the wrong set of rules. They buy on green and they sell on red. Having flexible rules is incredibly important. Getting on the right side of the percentage means you buy on red and sell on green. This is a completely inverted way of looking at financial markets, but it's how professionals look. With low amounts of knowledge, it's very easy to be unrealistic and to gamble using high leverage. Of course, that will go against the person, and the person may actually blow their account up, and their emotions will soon follow that blow up. They get angry and blaming because they seek to follow the herd. We don't do that. In a professional mindset, we're like eagles. We soar on our own. We are independent of the market. We don't have that news focus. We don't care what people are talking about. We actually do the analysis. We have three-dimensional risk management. We're calm and balanced. In fact, we subscribe to something called positive excellence. Positive excellence is about sustainable meaning, fulfillment, and happiness. Financial success, when done properly, is a backseat goal, not a front-seat driver. Unfortunately, with the retail mindset, because of all these particular issues such as low knowledge and gambling, unrealistic expectations, people can have an attitude of scarcity. On the other hand, professionals have an attitude of abundance. Retail is very, very impatient. It takes the acorn and it digs it up every chance it can get because they want to look at how their particular portfolio is growing. In truth, impatience never allows your portfolio to grow. That's why professionals are very patient and they know what they're doing. What is a way that you can become more professional right now, right this minute? When you look at retail, they only look at the charts they put money into. This is a huge mistake. You must get the market pulse. If you don't know where the markets are going and you need to cross-triangulate that, if you don't know that, you're in enormous trouble. Why is that? Because price is reality. A lot of people in the retail mindset get focused on the news. They're addicted to it. But the news is not reality. Price is reality. It's the only reality there is. Of course, fundamentals are very important, but you must understand price is reality. The other thing that retail does is it does RIP, or recent indicative price. It just looks at a very, very small subset of what a particular chart is doing and says, oh, that's the whole universe. That is not the way professionals do things. Professionals look at the structure of the entire market. They understand when they look inside a specific chart what that chart is doing through objective dynamic market structure. Also, retail forms pinpointed analysis using story-based analysis, or SBA. That little fairy there is weaving a magical story about how price might go. What we do as professionals, we only are interested in price reality. A lot of people look at a specific chart and say, this particular chart can do X, Y, and Z. where they don't realize that that chart is dependent on 10 other charts. The focus of becoming professional is always to acquire higher and higher levels of knowledge, to become your own financial advisor, and to become independent of the market and also other people. People find it incredibly difficult to buy on red and sell on green. After all, going down in price, wow, that could go down even further. Yes, we hope so. And what about selling when it goes green? That could go even up further. Yes, we hope so as well, because we layer into positions and layer out of positions as well. With reasonable expectations and our daily three-dimensional risk management. Every day we look at the market pulse, we look at the structure of different charts, and we do our three-dimensional risk management. I'm always assisting people to understand the interrelationship between charts and helping people to get synchronized. It's very important to understand. In retail, people think that they take another person's lunch if they want to eat. That is simply not the truth. It is not a zero-sum game inside financial markets. There are literally millions and millions of other participants, and you're just one of them. The market collects the money and it pays it out to those who are synchronized, and it penalizes those who are desynchronized. Literally everything on the retail side of that equation will desynchronize you. It's little wonder that desynchronization occurs so much in retail thinking. And it is thinking, because when you get across to that professional level, you can see it, you have a completely different way of thinking. Let's get a bit of an understanding on the market pulse and the structure and price reality. We'll just deal with that right now. As a professional, you must understand how all these different charts actually mean something. In order to get synchronized, that means in order to get paid from financial markets, to share in that pot of gold the markets collect and then distribute to the synchronized, you must understand what the VIX does. This is the fear gauge of financial markets. And masterclass students, you receive my live chart in TM6. We can see there was a retracement in fear in the last trading session. The NASDAQ futures have already indicated a bit of a leg up in the NASDAQ, and you need to know what the NASDAQ is and what it does, what it represents, how it works. If we look at the DXY, the US dollar currency index, we can see it's trying to break out but not having much success. We can see that the yields are coming down as bond prices are going up. Gold is a direct beneficiary of this, and you can see that blue line, that's Bitcoin. Bitcoin is also a beneficiary of this, and this is something we've been anticipating and waiting for. In the video I put out to the CTKS method service, I was talking about this potential action and what it could do for Bitcoin and gold, and we've seen that play out currently. Maybe a really good illustration. The retail mindset, say a retail trader and investor was interested in Nvidia stock. That particular person would just focus on Nvidia. That person would not focus on the tier 1, the tier 2 charts, just Nvidia, which is a tier 3 chart. What is the cost of doing this? Tier 1 charts move the markets. This sets the tone or the pulse of global financial markets. They are very, very important charts. If you're not looking at these charts, you're already on the back foot and you are getting desynchronized, which means that the money that you put into the financial markets is going to be distributed to somebody else. Tier 2 charts are equally as important because they confirm Tier 1 charts. Tier 3 charts are a way of applying Tier 1 and Tier 2. There are, of course, a lot of other charts and a lot of other things that people are interested in, but at the current time, this is the composition of Tier 1 and Tier 2. The thing to understand, Tier 2 can change over time, and even Tier 1 can as well. Financial markets are always changing their character. This is why, as professionals, we need flexible rules. Retail has no rules or the wrong rules, because retail basically not really quite sure how financial markets work. They throw money at something hoping and praying that it will return to them. Financial markets do not work that way. If anybody ever says to you, hey, I've got a sure thing, already that's a red flag. Just run away from that. All that we have as professionals is probability and stacking probability. Retail is addicted to certainty. Professionals are addicted to analysis and stacking probabilities. That's why we must look across the market pulse. But when we understand the pulse, we can only understand that from objective dynamic market structure, or what is called CTKS structure. With retail thinking, people mark up a chart based on recent indicative price. What is recent indicative price? Recent indicative price is basically the price on the screen. Let's have a look at the date range. So if I just pull this across, we can see that recent indicative price in this case is about 7 days and 16 hours. That's the value on that label. That means that the S&P 500 has been trading for 7 days and 16 hours. Oh, wait, no it hasn't. It's been trading since 1871. Why does this matter? Surely everything is just a couple of weeks old in terms of how people think about where the true support and resistances are inside market structure. Professionals don't think that way. They put in the work. They understand that they must know objective dynamic market structure, or ODMS, and the only way to get that is through the CTKS method. When we look at a chart like this, we might be tempted to say that there was an area of resistance here, but we know this is just a week old. Is it real resistance for something that's been trading since 1871? Of course not. But that's what retail thinks. Retail gets into all sorts of fantasies how professionals look at price. Professionals look at price over the long range. Where was the objective dynamic market structure? If you're a member of the CTKS method service, you will very soon be getting one indicator per chart for the level 1 tier 1 charts, the tier 2 charts and the tier 3 charts. That's coming as the month clocks over, so just be aware of that. I'll let everybody know inside the service. What we can see is the S&P 500 was trading up but got gravitationally pulled down to this strong area of smart money buy. It went through that, but these are safety nets that actually end up turning to ceilings. When we get across a ceiling, it's very natural to have a bit of a retracement until we go up to the next level of smart money sell. You'll notice some lines are thicker, some lines are thinner. This is done deliberately. The thicker the line, the more it counts and the more gravitational pull it has. As a professional, you must understand gravity as it plays out inside financial markets. Professionals have many rules, such as Rule 446. All markets are intercorrelated and interdependent. What does this mean? It basically means if you're only looking at the charts that you're focused on putting money into and you're not getting the market pulse, you don't understand how the tier 1 and tier 2, tier 3 charts relate to each other or the message that they're sending, you will lose money. It's just guaranteed. When it comes to the main markets, all these charts are intercorrelated and interdependent. They weave a magical story that we as professionals must decipher, and that story is ever changing. That's why the markets are always changing character. As soon as you've got one rule down pat, the market will say, time to change that rule. This is why professionals are very flexible and they engage in three-dimensional risk management. Three-dimensional risk management is a very important philosophical thing to have. With three-dimensional risk management, we know that we control the trade or investment, but the market controls the return, and your return is always based on how synchronized in with the market you are. If you don't examine the tier 1 and tier 2 charts, you're in trouble already because you don't know the pulse of the market. One thing the professionals know, they're always paid for their synchronization. They do everything possible to synchronize. When it comes to retail trading and investing, and we know that all investors become traders anytime they buy or sell. Traders are very good at picking the right timing to get in and out of different things. Investors have a superpower of holding on, being very, very patient. When people get angry and emotional, when they're blaming with unrealistic expectations and they're gambling, thinking that they just can't make it, all of those mindsets play into desynchronization. Retail thinking is all desynchronized thinking. This is very important to understand. Professionals are all about doing everything possible to synchronize in with the markets. If you've ever been in a position where you're impatient to place a trade or investment into the market, this is retail thinking. When you understand the market's pulse, know the structure of the market, and go and move with price reality, you're already ahead of potentially about 90% of people. Professionals also understand that market structure can override different relationships and different intercorrelations between different asset classes. For example, if the DXY is starting to come down, but gold was under a heavy amount of resistance, it's going to suppress gold's upsurge. And if yields were coming down, the same thing. You must know where the true support and resistance are inside what you're looking at, but inside all the charts. Gold has been trading since 1833, so where are the actual structural support and resistance levels in this particular chart? Marking up gold with the CTKS method since 1833, we can see that gold had an area of smart money buy support around that 1939 level and then lower around 1936. Gravity plays a huge part in financial markets. The stronger the line, the bigger and thicker it is. It has gravity. It will try to pull price back to that level. Price is always moving between these smart money buy areas and sell areas. If the smart money buy area gets too strong or too weak, it can throw price underneath it, and that's something to bear in mind as well. A lot of people would look at the US 10-year and say, what's that got to do with, for example, Bitcoin or gold or silver or copper or currencies or so many different things? The answer, it's a tier 1 chart, therefore it moves the market. In retail, people pay no attention to the different tiers of charts, and they often end in tears by not doing so. I invented the CTKS method to read the right-hand side of the chart to understand where price could be going from a probabilistic stance, and that's built on my more than 30 years of experience inside financial markets. So let's see where the true resistance and true support were inside the US 10-year yield. I did a deep dive analysis of all the different tier levels in the CTKS method service just a couple of days ago, and I was explaining this area of smart money resistance was likely to push the US 10-year down and push gold up and Bitcoin up as a result. We've absolutely seen that occur. Don't forget, these levels are magnetized. What that means is yields could come back and touch them before resuming down. There's a lot of uncertainty inside financial markets at the moment, but the objective dynamic market structure is what you need to look at. If you're getting a lot of lines, a lot of especially thick lines above current price, it's likely to push price down, and we see this time and time again. Bitcoin is an incredibly important chart to actually understand and acknowledge as being a very important chart. Why is it important? Why is it a tier 1? And it is a tier 1 because Bitcoin is potentially the world's most risk-sensitive asset class. And it trades 24 hours a day, 7 days a week. It will give you an indication of risk inside financial markets globally. What does this tell us already? With Bitcoin's price coming up like this, we can say, wow, risk was on. But you can see that it retraced, What does this mean? Did it encounter some smart money sell area inside its market structure? Yes, it did. Let's have a look and pop on the indicator. What we can see, Bitcoin was approaching, well, Bitcoin is currently 27,792, but was approaching this 27,942 level and a higher one around 28,109. What does that actually mean? As price pumps from one smart money buy area into a smart money sell area that's layered, we're likely to get negative momentum and likely to see the price retrace. This leads us naturally into Rule 603, synchronization profits. The only way that you profit inside any financial market, and I mean any, stock market, forex, commodities, crypto, you name it, the only way is to synchronize in with the market. If you are synchronized, you make profits. If you are desynchronized, you make losses. It is that simple. So then the question is, how do you get synchronized? The way to get synchronized in with the markets, you must have your foundations. You must be able to understand the interconnected nature of different charts. Then you need to enhance your pattern recognition. You're looking at the gravitational impact of the tiered charts across what you're looking at, what you focus on. Before you buy and sell, and there's so many ways to buy and sell, you must master emotional control through positive excellence and real wealth. If you don't master emotional control, you will be desynchronized. You'll be emotional, angry, and blaming, seeking to be reliant on others, having a news-based focus, and therefore very low knowledge, unfortunately. This is the way to understand financial markets. Those who are best in financial markets, of course, read the news, but we read it from a very different perspective. We filter out all the noise, which is perhaps 90% of a news article. And we look for a thing called interdependent signal. That is, something that makes sense, that it is impacting other charts and other market structure. We're always forming the jigsaw puzzle. And remember, the markets throw up that jigsaw occasionally, sometimes violently as well, when we get massive sell-offs. The other thing to understand, in retail does not take into account exogenous impacts to financial markets, such as black swans. Retail thinks that everything is just easy settings and is just read from the chart. If you get black swans, they're going to impact everything. You must be aware of these external factors. I created the CTKS Masterclass for a very specific reason, and that was to transfer my knowledge. If you reach out to any of the CTKS ambassadors, they can definitely help you out. They can answer a lot of different questions. And if you go across to the testimonial section, you'll see that there's many feedbacks on how the CTKS Masterclass has helped a lot of people. And I'm so grateful for people's feedback. I've never asked for feedback, and I'm just so grateful to receive it. Thank you, everyone. And what is the CTKS Masterclass all about? It's a structured way of learning the CTKS method, which is a premium Rolls-Royce level masterclass on CTA. CTA updates stock market and forex and commodity technical analysis. There's a lot of ways that you need to gain your foundations, and you can see the foundation section is pretty full on. The trend section is also quite intensive. A lot of people say, well, I just want a Udemy course. I want something that I can learn in about 5 minutes. Well, if you do that, garbage in, garbage out, as the saying tends to go, you really need a lot of information and a lot of practice as well to understand how to read financial markets. It's not that easy. You need a lot of background. And you can see there's a lot of background in here. The masterclass also covers off Level 1 CTKS Method Standard Certification and Level 2. Those indicators that I showed you, they are formed from that Level 1 and Level 2 certification. And when you learn it, you can apply it to any price chart. And when you learn it for a lifetime. The CTKS Masterclass takes a lot of dedication and commitment to get through. But if you get through it, it will be life-changing, as many people have found. I'd like to thank the Meditative Mind for offering a CTKS partial masterclass scholarship. You could be awarded this scholarship. You can apply in the links in the description of this video. And thank you again to MM. Your mindset is incredibly important. You know already that without persistence and commitment, anything that you've been wildly successful at would never have occurred. We also know that from time to time people can be lucky, but luck fades. Hard work builds. Retail traditionally doesn't care anything about mindset, and that's why they're so desynchronized. We know from a professional basis, mindset is everything. All results come from the mind, so a better mind creates better outcomes. What is it all about, and how do you create better outcomes? What is an improved mind? It's literally just better habits. That's it. In the retail mindset, it's scarcity based. It's all about competition. Lots and lots of jealousy. People see others being successful and they say, oh, I want to tear that person down or that group down or whatever that is. That is not the way to succeed inside financial markets. The only competition that you ever have is with yourself. If you're competing externally, you're doing the wrong thing. All advances in this world are contribution based. They don't come from competition. When people genuinely care, when they want to leave a lasting legacy inside this world of ours, they create all sorts of incredible things. You only have to follow what you're truly good at and just keep doing that. Let's go through the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness. As professionals, we're very balanced. We focus on the trades and the execution of investments and all of those things, but mindset first and foremost. Retail couldn't care less about mindset, and that's why they're consistently desynchronized. It's very simple in this world. If you want to be successful, just follow the path of successful people. That is, of course, in every endeavor. Let's go through the creed. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Buy on red, sell on green. Life pullbacks give me strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I never let a problem beat me because I solve it with positive excellence. This video has been all about understanding the retail mindset more effectively and therefore understanding what we need to do to bridge those gaps to enhance our professionalism. Trading and investing is a serious business. You must take it seriously or you will be consistently desynchronized. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.